U.S. stocks close lower as bond yields rise ahead of the Federal Reserve's interest rate decision due today. The street is largely expecting the Fed to hold rates steady, but guidance on future action will be keenly watched. Stocks in the Asia-Pacific open lower ahead of the Fed policy. The GIFT Nifty adjusted for yesterday's trading holiday is implying a gap-down start for the Indian market. And oil prices ease after hitting a 10-month high. U.S. oil output is expected to fall for the third straight month in October. Brent hovers around the $94 a barrel mark as supply concerns persist. The parliament officially begins business in the new building. The government tables the women's reservation bill in the Lok Sabha and proposes to reserve 33% seats in the Lok Sabha and state assemblies for women. No clarity on the timeline for implementation as the bill will take effect only after delimitation exercise following the next census. And Canada expels a top Indian diplomat alleging an Indian link in the killing of Khalistani leader Hardeep Singh Nijjar on Canadian soil. India rejects the claims, calling them absurd and manipulated, sacks senior Canadian diplomat in retaliation. Canada also issues a travel advisory against traveling to Jammu and Kashmir in India. Hey guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get out of this trading holiday. And today is a very important day because, we will get the Fed rate decision. So ahead of that, you definitely have the global markets which seem a little bit nervous. We do expect a status quo this time around from the Fed, but we did get a weak handover. And on the back of that, you have all of the Asian markets trading with some cuts right now. It's not too much in any of the markets, but what's perhaps looking the worst is the Hong Kong market. That's down around 66 points, not too much of a cut, around 0.4% lower there. The Taiwanese index is seeing a little bit of red as well, around 25 points in the red right now. And whichever Asian market you look at, it's just around 0.25% to maybe 0.4% in the red. So that's what's happening across Asia. The GIFT Nifty will come up for you and adjusted for the market holiday yesterday. It is looking like we will get a gap down start to really, kick things off. Around 98 points lower is where we're at. Remember, on Monday also we closed with around a 60-point dip. So it looks like we're definitely going to open in the red. But let's see how things, move from there as well. With that, let's talk about the U.S. market. We had Wall Street, which ended Tuesday's trading session lower. So the Dow was down around 100 points, 106 to be precise. The S&P 500 and the tech-heavy NASDAQ also closed the day with some losses, just some minor losses, not too much there at all. But it was around 0.2% lower on both of those indices. Now, stocks retreated and yields really surged ahead of the U.S. Fed policy decision, which is due tonight, like I mentioned. U.S. Treasury yields, in fact, have hit a 16-year high as the central bank is widely expected to hold rates with a tighter for longer stance. So that is the move that we saw on the U.S. bond yields, the 10-year there at 4.35. But with that, let's also bring you more on the Federal Reserve's two-day policy meeting, which has begun. And the central bank, like we said, is likely to skip a rate hike this time around. And majority of the respondents to a CNBC TV18 survey expect that the Fed will leave rates unchanged. We have Steve Leisman, who is here to bring us all of the highlights from that latest survey.
While there remains debate, respondents to the CNBC Fed survey generally believe the Fed is likely done hiking rates and is about to embark on an extended period of holding rates above 5%. Here are the Fed expectations from the CNBC Fed survey of 30 respondents. 93% say the Fed leaves rates unchanged this week. Then there's this debate, 63-37 hold versus hike in the November meeting, which almost exactly mirrors where the the futures market is priced. Then they hold on for 9.7 months, call it 10 months, where the Fed will hold at that peak rate. And then the debate about a cut comes in June, where the first plurality is 49-45 in the month of June of 2024 for an actual cut. John Riding from Green Capital says this is a meeting where the Fed should clearly transition the message from how high rates are going to go to how long are they going to stay there. Now, let's look. We have the inflation rate, the funds rate goes up. You see there that 5.5%. That reflects the some percentage of folks who thinks there's one more cut in there. But then you see that the inflation rate comes down. It means the real rate doesn't move. So the result is the Fed maintains a highly restrictive rate for some time, or a highly restrictive real rate for some time. Robert Fry, an economist, writes, with an auto workers strike, the resumption of student loan repayments, the exhaustion of excess savings, a possible government shutdown, and gasoline prices approaching $4 a gallon, we could go very rapidly from strong growth in the third quarter to declining economic activity in the fourth quarter. The trouble for the Fed and economists has been the unexpected strength of the economy so far made it difficult to game out where policy should go. So we asked folks, what mistakes have you been making over the past year? And you can see here, look at the percentage who underestimated the strength of the strength of the labor market, 69%. 59% underestimated the strength of consumer spending, 59% government spending. Then there was those excess household savings, lots of reasons to get things wrong. They think they had the inflation dynamic more or less right, but 11% underestimated the impact of Fed rate hikes, while 50% thought they would be stronger or they overestimated the impact of those rates. Now, 67% of respondents think that the lagged effects of tighter monetary policy are still to hit the economy in the months ahead. So the Fed may be on hold, but it's still going to be having a profound effect on the economy, and the economy may force it to adjust policy, so it can't necessarily just, put its feet up.
All right, so all eyes on the Fed meeting and Fed rate decision later tonight, and also what the commentary is likely to be for the upcoming rate hikes as well. But with that, let's move on and also listen to U.S. Treasury Secretary Janet Yellen talk about the state of the U.S. economy and the impact of the monetary policy so far. Listen.
There are lags in the impact of monetary policy on the economy, and we would expect to see some impacts. I think we've certainly seen it in the housing market. But look, we still have a good, healthy labor market. Consumer spending remains quite robust. We've seen strong industrial production. I don't see any signs that the economy is at risk of a downturn. And this is the best of all worlds, to see continued strength in the economy, a good, strong labor market, and inflation moving down. And that is what we're seeing.
That is what coming in from Janet Yellen. That's what we're looking at globally for now. But let's talk about all of the domestic cues that you should track, as well as some of the stocks that could be in focus in today's trading session. We have Rima and Surbi joining us now with the trade setup. Rima, we were just going through the global setup, which definitely seems a little bit weak ahead of that key decision due tonight. But take us through everything we should watch.
Indeed. So the Indian markets need to react to 2 days of, global markets. So on Monday, the Dow was down 200 points, while yesterday the Dow was down a little more than 100 points. So net, in the past 2 days, Monday and Tuesday, the Dow was down close to about 1%, the S&P 500 lower by 1%, and the Nasdaq has sold off 1.8%. So those are the cues, global cues, that we need to contend with. Well, part of the weakness did play out for the Indian markets even in Monday's trade, as the markets, after a range-bound session, did ultimately close lower by the close of trade. Two important things we need to track. One, oil prices. Now, oil prices briefly almost went to the $96 per barrel. The high was 95.96. It settled below 95 on profit booking, but oil prices have risen and now stand at a 10-month high. Secondly, the Fed decision, as you pointed out. We've been talking about it. We heard Steve Leisman. So just let me tell you the timeline. At 11:30 p.m. tonight, the Fed decision will be known. And at 12 o'clock, we will hear the Fed chairman speak. In Monday's trade for the Indian markets, the Nifty did end with modest cuts. And keep your eye on the broader market, because the mid and the small cap universe underperformed to some extent, and the advanced decline ratio was also negative. In terms of flows, the FI's net sold 1,236 crore, while the DII's net bought 552 crore in the cash market on Monday. Back to you.
All right, Rima, thanks a lot for running us through all of those cues. But let's also talk about the individual stocks that could be in focus in today's trading session. We have Surbi here with that entire list. Hi, Surbi.
Hi, Pavitra. So first one on my list is Tata Motors. The company is going to hike prices of its commercial vehicles up to 3% from October 1st. Next is HDFC Bank. Now, the company hosted a sell-side analyst meet and presented the impact of the merger on the P&L and the book value per share. So they say the impact on the net interest margin will be tad bit higher than expected, and the net worth impact will be of 5%, which is mostly non-cash and transitional in nature. So that will be on our radar. Blue Star, the company launches the QIP to raise up to 1,000 crores with a floor price of 785 rupees per share. Biocon, Peter Baines is appointed as the Biocon Group Chief Executive Officer with effect from September 18th. Amber Enterprises, the company forms a JV with Nextbase for manufacturing and designing of wearables. And lastly, NBCC, the company gets a work order of 150 crores from Khadi and Village Industries Commission.
All right, Surbhi, we are going to watch for all of these stocks in today's trading session. Thanks for running us through that list. Finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Nigel, looks like the start will be lower, but take us to what we should watch.
Well, morning, Pavitra. Good to have you back here in Mumbai. Well, yes, the start is going to be lower. And in Monday's trading session, you had both the Nifty and the Nifty Bank that ended virtually at the low point of the day. And HDFC Bank, for me, that's going to be the big stock of the day. Remember, in Monday's trading session as well, it ended at the low point of the day. And importantly, the takeaways from the analyst as well as from the analyst's call, as well as the presentation that they put out was a bit of a dampener. So let's see how much of the bad news is in the price. That starts off on the back foot. But from there, what happens is going to be crucial from a market perspective. In Monday's trading session, you had unwinding of positions both on the Nifty as well as the Nifty Bank. So there were no fresh shots that got taken into the system. And the FI as well, they did just that. They unwound mostly long positions and they continue to remain net long with the long positioning at close to around 65%. What are the options data suggesting? I'm looking at the Nifty options data. You have the highest open interest added on the 20,200 call as well as on the 20,100 put. So just plugging in those numbers out there, the 20,100 put, the premium's roughly around 50-60 rupees odd. That's telling you that the 20,040, 20,050 odd level, the bulls would like to defend that on a closing basis. On the upside, though, since you have the premium at around the 20,200 call at around 90 rupees odd, at around 20,290 and 20,300, that becomes a bit of a resistance zone. But today you have the Nifty Bank that plays out its weekly expiry, so that's going to be very, very important. And you had signs of writing at the 46,100, 46,200 call at both those two strikes. So you have a bit of a resistance zone at around the 46,300 odd mark. On the downside, though, the 46,000 put, well, that has the highest open interest. So on a closing basis, the bulls will want to defend that 45,700 odd mark. So let's see how this goes. For starters, it's opening up in the slot, down close to under 100 points. And as I said earlier, HDFC Bank holds the key for today's session. Back to you.
All right, Nigel, thanks a lot for running us through all of those cues. Like Nigel was pointing out, 100 points lower is where we're at for, where the open could be. But with that, it is time for a short break. When we return, the Parliament officially begins business in the new building. The government tables the Women's Reservation Bill in the Lok Sabha. We're going to bring you all of the details on that very important story when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast. Now, like we were mentioning, the special session of the Parliament is underway and the Lok Sabha began its first proceedings in the new Parliament building on Tuesday after Prime Minister Modi, along with senior ministers and other MPs, officially entered the building. Now, ahead of the day's proceedings in the new building, Lok Sabha and the Rajya Sabha MPs gathered at the Central Hall for a function to mark the historic occasion. And Prime Minister Modi, in his last address at the old building, said that it will be known as Samvidhan Sadan. But in a key development yesterday, the union government introduced the Women's Reservation Bill in the Parliament as well. And they proposed legislation which seeks to implement 33% quota for women in the Lok Sabha and legislative assemblies. Do note that even if this is passed, this act will become a reality only in 2029. My colleague Shivani is here with us now to bring us all of the details.
Well, yes, in a historic move, the Indian government has introduced the Women's Reservation Bill in the Parliament today, and the bill was cleared by the Union Cabinet on Monday, in fact. The legislation will reserve 1/3 of all seats for women in the Lok Sabha as well as the state legislative assemblies across India. This means that the bill seeks to reserve 33% of seats in the Lok Sabha as well as state legislative assemblies for women. According to the bill, 1/3 of the total number of seats reserved for scheduled caste and scheduled tribe communities will now be reserved from women of these groups. The bill clearly states that the reservation of these seats for women shall cease to exist 15 years after the commencement of the Amendment Act. Remember, this is not the first time that the bill has been tabled in the Parliament. While the bill was passed in the Rajya Sabha in 2010, it was not tabled in the lower house of the Parliament until today.
All right, Shivani, thanks a lot for getting us all of the details on this one. With that, it is time for a short break. But when we come back, we're going to talk all about the commodity markets. Brent is still around $95 a barrel. So we'll get you the details in just a bit. Welcome back. You're still tuned into Power Breakfast. Let's talk about the commodity space now. Manisha joins us. Manisha, what are you looking at ahead of the FOMC decision tonight?
Oh, well, absolutely. I mean, that is something that the street is looking for. And even as there is a 98% probability from the CME Fed tools now that there would be no rate hike in this month. But remember, we still have 2 more Fed meetings to go before this year ends in the month of November and December. So it would be important to watch out for the commentary on how long these higher rates will stay and whether or not there is still another rate hike in works for this year now. So ahead of that, we've seen some profit taking come in for the crude oil prices. Last night, it made a high of 95, almost $96 a barrel, but we've seen $1 to $1.50 of a decline coming in right now. UBS report also advises clients to take profit on longs above $95 a barrel, and that seems to be weighing onto the markets. The decline also is seen in metal prices, where copper declined a percentage point, and that pretty much has been the case across metals. The only thing that seems to be holding fine is gold and silver. Markets have factored in no interest rate hike, but you also will be looking at monetary policy meetings from Japan, Switzerland, England. So it is going to be a choppy week for the rest of 3 days now.
All right, Manisha, thanks a lot for getting us all of those details. But with that, let's also talk about a big diplomatic development. In a major blow to India-Canada ties, the Canadian government has expelled a top Indian diplomat after Prime Minister Justin Trudeau claimed that India may have links to the assassination of Khalistani separatist leader Hardeep Singh Nijjar. Now, the Indian government has rejected the allegations and lodged a strong protest, calling Canada's claims absurd and motivated. They've also gone ahead and expelled a senior Canadian diplomat as a retaliatory measure. Separately, Canada has also issued a new travel advisory for India to avoid all travel to Jammu and Kashmir due to the unpredictable security situation in the region. So that is an important update on the India-Canada relations. With that, we're going to have to wind down in this edition of Power Breakfast with the news that the Asian markets are largely lower. All of them actually right now in the red, barring just the Taiwanese markets, which has moved up a little bit right now. The GIFT Nifty implies that the start for our own markets could be around 100 points in the red. Thank you for tuning in. We have Bazaar Morning Call up in 2.